Hi everyone, it's Alan Wang with the Alan Wang Realty Group at Keller Williams, Santa Clara Valley. I'm hoping you're all having a great summer. Want to get into it with the June real estate update. A lot going on that I want to cover with you. So let's jump right into it. State of the market. Well, I mean, let's just say very unstable right now. Lots of instability, lots of volatility in our marketplace right now. Tariffs. We have the 13-day war with Iran, I suppose. We have ICE, and we have the rise of AI. All kinds of stuff going on in our country that's making folks nervous. So instability would be the word I would use. Right now, selling real estate is house to house. Just kind of depends on which property we're looking at. Buyers are frozen, sitting on the sidelines and just waiting, not doing a whole lot right now. This is across the nation, especially in Silicon Valley. The stock market has rebounded. So why aren't folks getting out of their seats? I mean, that is the question of the day. Moving along here again, the economic factors that I'm watching are really from a macroeconomic level and a political level. Even though our tariffs have been walked back, a majority of deals have been struck, and a lot of the tariffs have been walked back from, the American consumer has not recovered from that whole thing, the whole instability, 20% drop in the market, et cetera. Buyers are people are just very cautious right now, spending, et cetera. This war with Iran, that was unforeseen, although it might have been tapered down a little bit right now with the possible ceasefire. Again, these kinds of things make people nervous. And then also AI, the rise of AI causing more job loss in the tech sector, especially, all equates to instability, at least for the real estate market, especially. Inflation at this moment, irrelevant. We'll talk more about that. Mortgage rates, honestly, not largely changed. Stock market's recovered, but still scratching my head. And unemployment mostly unchanged as well, but we'll get through the data here really quick. So this whole tariff thing, right? So back in April, when the whole tariff scare began, everyone freaked out, and that fear is still there. There are very few deals being negotiated in the real estate space. Stock market has recovered. We're literally up 4% today since December. And talk about a big swing of being down 20% in April. We're now back up 4%. And so, all in all, I mean, we're all recovered and doing pretty well. But what I'll tell you is buyers have not. Consumers are creatures of habit, and they don't just swing the way the market's been swinging. Don't like to do that. Inflation, again, largely in check. The main numbers are coming in at 2.4%. I remember when inflation started, it was 9.1% in June of 2022. 2.4% is pretty good. Again, we do need to monitor that some of these tariffs are still in place. So maybe we'll see them in the next few months. But yet, I mean, this is the level that the Fed has wanted to be at. Mortgage rates. Everybody blames interest rates. I noticed that in my conversations as well as on the news. Oh, mortgage rates are high. That's why real estate is not doing that well. Well, I mean, it's been high. There hasn't really been a lot of change here. This is a conforming nationwide rate at 6.81%. Just grabbing some data from local Wells Fargo, which most folks use around here. I mean, rates are six and a quarter, 6.5%. And there's some really cool programs out there. Assets under management. Ask me about that. They can get your rate down lower. There are a lot of programs that will bring it even sub six if you need to. So it's not as bad as people are painting it out to be. It's not interest rates. So don't blame interest rates. The Nasdaq today, I mean, we're at 20,000. I mean, this is yet another record for the Nasdaq, and that is just insane. I mean, literally, the market was down 20% in April, and now we're up 4%. I mean, that this is just. I mean, talk about the swing, right? I mean, we're talking about the lows right here, and now we're all back to an all-time high. And so, scratch your head. Everyone's excited that I guess ceasefires will be. I mean, just the swings this year have been phenomenal. I don't know, it's phenomenal, but just insane. Unemployment, again, during COVID, 16%. I typically see it hovering around 4.5% in California. But it's been at 5.3% for a little while now. I mean, last year we had the tech sector doing a lot of layoffs, and they continue to do so. We thought this year would change where we would hire more, start out that way, and then with everything going on, companies are clamping down more. Tech sectors are extremely concerning because of AI. A lot of the lower level engineering jobs are unnecessary, and a lot of administrative jobs are being eliminated. And so the future of AI will be interesting, definitely changing and reshaping our world. Here's the tech sector layoffs. They had a slightly bigger drop in May there. a little less in June. I mean, I don't see tech companies really hiring unless you're an AI expert. Other than that, I mean, I don't know that this sector is going to grow per se. Something to monitor, yet no red flags yet in the Silicon Valley real estate market per se due to these, but it's really due to macroeconomic factors. What are my projections? Again, I talked about the macroeconomics. I mean, the tariffs scare folks. This little short war with Iran scared folks a little bit. AI scaring people. Again, what's next? I mean, that's the big question. It's the big unknown. 2025 is who knows what's coming next. I mean, this is a little just the beginning of this new presidency. The volatility is likely not to subside. So don't know. I don't know when the American consumer will feel good about going out and making big purchases. Again, inflation steady. So that's not the reason why people aren't buying real estate. Federal Reserve, interesting. Apparently, the president is signaling that he wants to replace Jerome Powell, which is he's been signaling for a while, but even before his term is up. And the word on the street is that he will replace him with somebody who's more friendly to his policies, which is he believes there should be a rate drop. Here's my question. I haven't seen that, oh, just because you drop rates by a quarter, that buyers flood out in the streets to go buy houses. Now, is 0.5% more material? Maybe. 1%? Oh, yeah, they'll probably be out and about. So we'll see. If the Fed just kind of does these little quarter drops, I don't see people just getting out of their seats and buying houses. But if the drop is substantial enough, maybe. But I think most buyers are going to be cautiously optimistic. Again, NASDAQ has recovered. So sellers, if you're a seller right now, I will tell you it has been tough for you, and it's been tough for us. I call it the tale of two markets still. I mean, let's start with the market with good schools and safe areas. Even these areas are struggling. And that is extremely rare in the Silicon Valley for schools, areas with great schools to struggle. I've been seeing price drops in Los Altos, Palo Alto, even Cupertino. Homes are coming off the market, and it has been baffling. A lot of folks are on the sideline. It's almost house to house. If you have a beautiful home in a great school district, fully move-in ready, no issues on resale, the odds are it'll move if it's priced properly. But other than that, it's a dice roll. Not everybody wants a fixer-upper anymore. Not everyone wants a medium condition. They have a lot more choices. And so it's been, again, house to house is what I've been seeing. Non-school locations, then it really, really depends. I mean, I guess if you're a sub 2 million home or sub 1.5 home, might get sold just due to the price point and affordability. But beyond that, no guarantees. With the homes are struggling, sitting longer, etc. The townhome market's also been struggling pretty much as well. And the condo market has been absolutely awful. Awful. I mean, just seeing price drops everywhere. No one really looking at these properties. Again, if you have a choice, why would you pick a condo? I mean, usually would go, the preference would be a single family home with a backyard, a lot. Then you'll settle for a townhome, and then you settle for a condo. Right? That's typically what people do based on affordability. And so that's the preference on real estate. Open houses have been extremely slow, barely getting a whole lot of folks coming in. Maybe in the beginning, you might get 5 to 10 groups, and it starts tickering down to 2 to 3 groups. Low traffic there. Days on market are longer. Homes are no longer flying in a week. Actually, after 30 days, you can do a price drop, and still nobody might not come. And so the market is struggling to find its bottom right now. And so just cutting price aggressively doesn't mean anything. And it's really difficult to gauge what's going to get buyers out of their seat right now. We always have backup plans for our sellers right now in this market. What we have seen, some that work for some folks, is an aggressive price strategy right in the first few weeks. Get the traffic through, get multiple offers, get off the market. It may not be to the number that you were hoping for back in March, April, for sure. You're not getting those numbers. But if you're looking to sell, that aggressive strategy has overall worked. Again, no guarantees. Every neighborhood, there might be a lot of choices, and buyers may not pick your house. And so it's definitely tough for sellers. Have a backup plan in place, whether that's renting or perhaps coming off market. We could talk about those strategies. Buyers, again, I mentioned frozen, sitting on sidelines, not doing a whole lot. Just kind of watching and waiting. Even though mortgage rates are steady, inventory's up, they have a lot of choices. Buyer confidence is just low. They're just low. They're scared. They're nervous. They're sitting on their cash. They're rather rent. Rental market's great right now. But here's my advice. Again, we never know. One of these clients asked me yesterday, "Hey, so when do you think my house is going to come back to this number? When can I get that number?" I said, if I knew that answer, I'd be a lot wealthier than I am now. I don't have a crystal ball. But the chances are, by the time the markets changed and turned, you already missed it. And so I think the big question is, okay, why do I need to buy? What's my driving force? Do I need to move schools? Am I getting married? Are my folks coming to live with me? Those are all great reasons to purchase real estate. But at the same time, you have to realize you may never catch the bottom. So I think that's the problem with buyers. The buyers all, when everyone's buying, your friends, everyone's buying, then you feel okay overbidding by 100, 200, $500,000 because hey, everyone else is doing it. But when you have a chance now to go under by 100, $200,000, human nature, they wonder, oh my gosh, am I overpaying, et cetera, et cetera. It's really, really strange. So I will, this just human nature, the fear of missing out either way. You fear you're missing out if you're in a bidding war and you don't win, and you fear that you're missing out because prices are on the decline that you didn't catch at the bottom. It's kind of hard to win. I will keep saying this, a page from Warren Buffett's book. If there's blood in the street, I buy. And so if you go back to in April, if we were all brave enough to buy at 20% down, we'd be up 20% right now. Now, maybe you didn't catch it at 20. Maybe you caught it at 15. Maybe you caught it at 18. Maybe you caught it at 13. Maybe you caught it at 10. You would still be up right now if you were brave enough to go against what everyone else was doing. And so that would be the wisdom I would bestow upon you. If we are brave enough to buck the trend, then we will be wealthier than everyone else. That's kind of the way I would phrase that for you. Contingencies, buyers, I'm going to have this conversation with you every time we write an offer because I've been noticing buyers for that very reason, fear that they didn't catch the bottom, getting cold feet and trying to back out in the middle of everything. And that is an absolute mess. And so hiring lawyers, going to mediation, none of that's fun. So I'll definitely sit down and talk to me before, and I'll be talking to you about your offer and what that means. All right. Well, I'm done here. Enjoy the rest of your summer. Please call me if you're looking to do something. 408-313-4352, either selling or buying. Let's see what makes sense for you and your family. It's going to be an interesting year, but we are always here for you. We appreciate you. We thank you for always being loyal customers. Have a wonderful day now. All right. Bye-bye.